Another great week in the market, and we've added a new $4,000 options position, and I have another stock I've added to my watch list, so stick around to find out. To start us off, we did have SPY going to an all-time high later in the week. I think this is due in part to the strong corporate earnings we had from apps like AppLovin, Robinhood, Upstart Holdings, and Shopify. They all reported better than expected earnings, boosting investor confidence in my opinion. And despite higher than expected inflation data, the market remained resilient with positive retail sales figures suggesting they continue consumer spending strength. And then the third reason being President Trump's decision to delay the implementation of reciprocal tariffs provided a relief to investors that were concerned about the potential trade tensions. Overall, I think the market's sitting in a very healthy median, and I feel like it's probably in the best position it could be after getting all the information it's had this week. We've also got the fear and greed index about sitting neutral, so I think that's a very positive thing going into the coming weeks. Next up, I want to go over a stock that I called out in my last video, and that would be none other than Coinbase. And at the time of making the video, shares were sitting around 283, and like I predicted right after they announced the earnings, their stock went up almost 5%. Sadly, all my shares didn't get filled. I did have an order to get 10 shares at 282. For some reason, only 6 of them got filled, but I did get out around the 293-ish, 294-ish mark for some nice profits. Next up, we have our $4,000 options play. If you've been watching me for any amount of time, you would know that I love this stock, and that stock is Microsoft. Microsoft is currently sitting at $408 a share, down 4.1% year to date. The reason for them being down comes partly due to their earnings call, where they announced a disappointing cloud revenue forecast along with increased AI investments. And then we've also had a market-wide tech stock pressure, in my opinion, that's kind of pressured some of these tech stocks. But the thing I'm loving about this stock is no matter where you look or who you listen to, everybody's got this stock, even on the lower side at around a prediction of $425, with the average prediction on Yahoo Finance being closer to around $508. This just feels like a very easy play. You've got a Mag 7 stock, which is currently down 4.1% year to date, being on a relatively cheap dip. And the reason I didn't go any more heavily into this is because I don't really want to exceed over 15% of the portfolio in any one thing, and I've already got some Microsoft shares on top of this option. Next up are the two stocks we've added to the watch list, being Alibaba and the Chinese large cap ETF. With both of these guys being up this year, why would I add? Part of the reason being, if we look back on a 5-year scale, whether it be Alibaba or the iShares ETF, you'll notice that neither one of these stocks really fully recovered after COVID. So you've still got the valuation discounts there. Another reason being the policy support from the Chinese government. The Chinese government has been introducing stimulus measures just to try and reboost their economy, also including interest rate cuts, fiscal stimuluses, and regulatory easing to boost economic growth. In my opinion, the stocks aren't really up as much as they should be with all the effort that you've been getting out of the government, and I feel like what we're seeing out of the stocks is China's economy showing signs of recovery. And to wrap up the week, we'll break down the numbers. Last week we finished with a total of $42,266, and this week we finished with a total of $43,019, leaving us with a $753 gain. We do have to subtract the $300 that we did deposit. That leaves us with a $453 gain on the week. If you did enjoy the video, please don't forget to like and subscribe for a donut. Peace out.